I mentioned at the start of this call the fact that there is an opportunity for all of us to save money and all of us potentially to invest. And this is an example through one of the insurance companies that we also work closely with, Zurich, who have what I think is the best savings plan available in the Irish marketplace. It's something that I have myself, and every client that I come across, every individual, I talk to about this plan and say that you should be doing this. And I don't care for the fact that some people may not necessarily have the funds to do this now. It's about allowing a financial advisor like Alpha Wealth to help you in terms of finding the amount that's required. And as I said earlier, the minimum amount for this account is €100 per month. And I do feel that everyone should have the ability to do this. Now, why do I like it so much? The reason being is that it allows you total flexibility of payment. You can start the account at any amount that suits you, whether it be 100, 500, €1,000 a month, or even more. And you can stop it at any stage. You can increase it or reduce it. The key thing is that you can access it at all times without penalty, which I think is a huge opportunity for people to be able to, get the most from their savings. And as well as that, Zurich will manage your money for you in a whole plethora of different types of investments that are suited to your own requirements. And as I said earlier, whether you're saving for the longer term, for things like kids' education or retirement, or even the short term for, say, for example, for a deposit for a house or an apartment, I think this plan suits all opportunities. And the reason being is because the banks will not serve you well at all. And it's all about trying to keep pace, not just with inflation, but to try and make a real return on your savings. All financial brokers worth their salt provide this account. What makes Alpha Wealth unique, really, I suppose, is the fees that we offer. I haven't come across a broker in Ireland that can offer lower fees than we do, which is 100% of the money invested in the fund. We cover the government levy and we charge a low management fee on these funds, depending on whether it's a lump sum or a regular payment. But again, please feel free to reach out to us and we'll go through the specifics of that with you. This talks a little bit more about the fact that these savings are available. As you can see on the slide here, there is no tie-in to how long you have to save for. We generally recommend 2 years and longer, but I've seen clients who have done this for much shorter, and we have clients who have been doing this for over 7 years now, and it really depends on what works best for you. But the key thing to know is that it's accessible and can be used for any purposes, whether it's for changing your car in a couple of years' time, a holiday that you're looking to maybe when things settle down, I suppose globally, or indeed if it's for your retirement as well. The scale that you can see on the slide here, and I appreciate it's probably not appearing too large, but you can get a sense of the fact that there's a whole different range of funds available that would allow you to pick and choose what suits you. And we work with clients as advisors to help ensure that you're in the right type of account for you. Most of the savings clients that we deal with generally fall into this green category of medium risk, whereby you're looking for a return of about 5 to 6% per year with a certain level of risk associated. People must understand that you cannot get returns on zero risk money. That's impossible in this climate. But more important is that you have confidence in the manager, and in this case Zurich, that they're going to make a return on your investment. And I firmly believe, and I'm going to prove to you in a second why I feel so strongly about that. The main thing about saving, in my opinion, is about giving these plans time. And this slide here shows the effect of compounding. For, say, for example, a parent who is saving for their child. I have 3 children, and if you're in receipt of the child allowance of, say, €140 a month, after 5 years, that can accumulate on a very conservative rate of growth, which is 4% in the illustration here, about €9,000. If after 12 years you're saving for your child's education needs, that's 25,000. And by the time they get to college, if you've been saving since they were born, that's about 42,000. And that, in my opinion, is more than ample for what I believe any child would need. Now, the one thing to bear in mind is that inflation is going to erode some of the value of that money. But again, there are ways in which you can add further to it by ways of lump sums, which is the illustration shown here. So even those who are starting only now, and if you have a child who is 13 years of age, if you happen to have a lump sum, in this example, 10,000, and if you save just the child allowance of the 140, that will accumulate approximately about 20,000 euros in 5 years' time. This table here, and it's a little bit fussy, but I've highlighted in red just a few key numbers that I'd like you to think about. If you're in a position where you can start the 100 euros a month today, in 5 years' time, very conservatively, that should be worth about 6,800 euros. And again, that's a conservative estimate of what we believe it will be worth. If you were in a position where you put in 500 euros a month today, in 5 years' time, that'll be worth approximately about 34,000 euros. Significant returns and amounts that you can build up in, something that is accessible, flexible, and really well diversified. And then you can project out for, say, 10 years from now, what those numbers look like.